article that predicted Amazon's failure. Amazon.bomb is an article that was published in 1999 by Mo Jaffe and Julianne Jaffe. The article is a critical analysis of the dot-com bubble and the rise and fall of the online retailer, Amazon.com. The article's title, Amazon.bomb, is a reference to the stock market crash that occurred in 2000, just a year after the article was published. In this video, we will explore the article Amazon Bomb and how it predicted Amazon's failure. What was the article? In the article, the authors argue that Amazon.com was a prime example of the irrational exuberance that characterized the dot-com era. They suggest that Amazon.com's meteoric rise was fueled by hype and speculation rather than sound business fundamentals. The authors also criticize the company's strategy of focusing on growth and market share at the expense of profitability. The article begins with a brief history of Amazon.com, describing how the company was founded by Jeff Bezos in 1994 as an online article store. The authors note that the company quickly expanded beyond articles, selling a wide range of products including electronics, toys, and clothing. They argue that Amazon.com's aggressive expansion was fueled by the belief that the company could eventually dominate all aspects of online retail. The authors also provide a detailed analysis of Amazon.com's financials, arguing that the company's revenue growth was unsustainable. They point out that the company had yet to turn a profit, despite years of rapid growth. The authors suggest that Amazon.com's focus on growth at the expense of profitability was a major red flag for investors. The article also describes the intense competition in the online retail space during the late 1990s. The authors note that Amazon.com faced stiff competition from established retailers such as Walmart and Target, as well as other dot-com startups such as eBay and Yahoo Shopping. The authors argue that Amazon.com's dominance in the online retail space was far from assured, and that the company's rapid growth was largely driven by hype and speculation. The authors also discuss the role of the media in promoting the dot-com boom. They suggest that journalists and analysts were too quick to praise the potential of online retailers, such as Amazon.com, and that this hype fueled the market's irrational exuberance. The authors argue that the media played a major role in creating the dot-com bubble, and that Amazon.com was a prime example of this hype. Despite its criticisms of Amazon.com, the article does acknowledge the company's potential. The authors suggest that Amazon.com could have been successful if it had focused on profitability rather than growth. They note that the company had a strong brand and a loyal customer base, and that these assets could have been leveraged to build a profitable business. Overall, Amazon.bomb is a scathing critique of the dot-com era and the hype that surrounded companies like Amazon.com. The article provides a detailed analysis of Amazon.com's business strategy and financials, and argues that the company's rapid growth was largely driven by hype and speculation. While the article's criticisms of Amazon.com may seem harsh in retrospect, they were prescient in the context of the dot-com era. Ultimately, the article serves as a cautionary tale about the dangers of investing in hype-driven companies. Why was it wrong? The predictions in Amazon.bomb were based on several false assumptions, namely that Amazon was too small to succeed, that its business model was unsustainable, and that its customers were not loyal enough to sustain the company's growth. However, these assumptions proved to be incorrect. In reality, Amazon's low prices, wide selection, and fast delivery system made it very attractive to consumers. Additionally, the company's customer service was excellent, and its delivery times exceeded expectations. As a result, the company was able to expand rapidly and become one of the largest online retailers in the world. What happened to Amazon after the article? After the release of Amazon.bomb, many predicted Amazon's demise, but instead of failing, Amazon went on to become one of the most successful companies in the world. Despite its dire predictions, the article gave Amazon valuable publicity, and it increased the company's presence in the media. This publicity was integral in driving more customers to the site, which helped spur rapid growth for the company. In the 2 decades following the release of the article, Amazon revolutionized retail, becoming one of the biggest online marketplaces in the world. It has also expanded into other areas, including cloud computing, streaming services, and artificial intelligence. Today, Amazon is one of the most valuable companies in the world, with a market capitalization of over $1 trillion. Amazon.bomb may have been wrong in its predictions, but it certainly played an important role in Amazon's success. The article highlighted the risks associated with investing in the company and acted as a warning sign for investors who were looking for potential returns. Ultimately, it was Amazon's vision and its ability to adapt to changing markets that made it a success, not the dire predictions from this now infamous article. If you had invested $10,000 when the article was published in 1999, you would have $400,000 today. What do you think of our video? Let me know in the comment section below. If you enjoy this video and want to hear from me again, be sure to hit that subscribe button before you go. Thanks for watching.